What's going on, everybody? It's your boy Doc. It is July 2nd, 2024, 12:17 p.m., 82 degrees here in New York City. But what are we talking about the weather for? We're talking about the stock market, right? Anyway, specifically, we're going to be focusing on Quant trading app again today. Why? Because it's my favorite tool, and I really love using it. This is a workshop that we normally have in-house, but we're going to do it on YouTube today, mainly because there's a couple people that asked for it, but they can't make it, or they're at work and they can't make it later in the night. Anyway, focusing mainly on a couple stocks you might have heard of, Tesla and NVDA, right? Tesla and NVIDIA are the one of the two of the most requested tickers to look at aside from SPY. It just so happens that Tesla and NVIDIA are in the, the gamma exposure channels, right? We recently upgraded a couple extra ones to include the entire Magnificent 7 at request of a member. Anyway, so what is the gamma exposure levels? It's these charts right here, this feed that comes in every 15 minutes. You'll get a snapshot of the current GEX levels that exist in the environment that you're choosing here. So right now we chose Tesla. This is not a sample, actually. This is the exact screenshot, the snapshot that's been taken right now. Tesla had a major run up this morning. It looked like it was going to top out at 224, 225. Then it looked like it was going to top out at 228, and then finally 233 seemed to be the top of it all. But what are we looking at here? This is gamma exposure. These are the high GEX bars that everyone likes to look at for attraction. And you can look up GEX. You can look up the definition. It's the amount needed to move the underlying point. What we really want to focus on is how to trade it. These high levels, these tend to be attractants, right? These are areas of liquidity. High liquidity is also the absolute GEX level. We'll get into that a little later. But anywhere you see absolute GEX is an attractant, and anywhere you see one of these high levels is also an attractant of price. Just the way price action works with the market makers, we can get in. I've gotten into that pretty much every video I've done, so I don't want to bore you again. But we're going to focus also on behind the bars. This is the call volume. These are, when you see this, this like centered around one strike, that raises the eyebrows of people that are watching this. Also, the put volume here. For me, call volume spikes act as resistance levels. Also, a little bit of attractant. I'm more leaning towards attractant more and more after I use it. But this really operates as resistance levels. This doesn't mean that it's an impassable level. It just means that it's going to have to do a little bit of work to get over it. So right now, we're looking at 230. The price action is right below it. I think at 228 right now. This is NVIDIA. Let's get to Tesla. Right? So let's start with a macro view of Tesla, right? If we go to the weekly, we could see that Tesla, for the life of its activity, is in a symmetrical triangle. Usually, when you play the symmetrical triangle patterns, you look at the entrance into it. So if we had like a nice pole going into the symmetrical triangle, you could say, okay, we have a chance of popping higher, or because it's symmetrical triangle, a high chance of reversal coming down. Being that there is no real pole coming into it, it's just the entire life of Tesla exists within the symmetrical triangle. It really is, you can really consider it an either or 50-50 shot. However, being that this is Tesla, right, and this is like arguably the most sought after traded ticker for options that there is. I mean, NVIDIA could be up there now, and Apple is always the king of stocks. But this, more likely, we should see Tesla go to the upside, right? That's fair to say, the upside. The only question I have is if this pattern is really done, meaning have we bounced around enough in this pattern? So if we put it back on here for a second, we can see that we entered it. We have an A, a B, a C, a D, and an E, right? So this could be a breakout. This is a well enough breakout. We bounced around 5 times right here, right? A, B, C, D, E, right? This could be a breakout to the top side. And if this gets rejected, we should see another visit down somewhere within this trend. And I'll get rid of my lines to see it better, right? And this was a lot of energy in a short period of time. just flying up from 140 almost to, to closely 100 points, right? But it got to 233. So I'm expecting a little bit of a pullback. It's not that it should happen. I mean, if you look at the RSI on the weekly here, we're only in the 60s. It's got room to go. On the daily, RSI is kind of pegged at the 80 mark, but I mean, Tesla has gone above 80 before. This was in 90s on the major run up back here. But what I'm looking for is to find some resistance where this is right now. And let's look left, right? Let's do a little bit of technical analysis here. If we look left, what do we see as resistance, right? We see this little level here. And if I hold that straight, we should see a number 233. 233 was... Did it get there? I thought I got to 232 something today. It did not. I'm sorry. So we got to 231.14. Still a little more to go. I think I marked off 233. There you go. We are nice, healthily above the VWAP. It hasn't even gone back to check it since this morning's run-up. Right after open, it did, and it spiraled up to it. So we could trade out sideways here. The VWAP could be a nice cushion. But if this VWAP breaks, and this 225, I forgot what this... Oh, this is that's the symmetrical triangle line. If it breaks, it will test that symmetrical triangle line. It's not going to line up perfectly on the 5-minute. On the 2 hours, it's a little more. But if it's going to test this line and hold it, then we'll be more inclined for a much, much higher potential. Because I say much higher, because if we zoom out, the next one up, the next spike there is at 264, 265. So that's a lot of room, right? That's a lot of room. And if we look, what kind of resistance are we really having here? Maybe there's one at 241, but after 241, it's almost like a straight shot up there. So if we're playing the downside, it would be a local downside. If we're playing the upside, we could go a little further out, right? We can actually anticipate a little bit of pullback to go higher. So what you could do, you could play the short side in the short term and play the long side in the long term. So giving yourself a hedge with time and a hedge down in price. So in other words, instead of just getting an August put, or November, I went all the way out to November, sorry, a November put for 200 and a November call for 260, you can get that short put. So we maybe get a 712. I think I have 712 210. Let me double check. No, 2075. I have 210 and 2075 for this week and next week. Just in case we get this little pushback pull down. Now, where did I come up with that, right? I feel that this call volume spike is going to act as a little bit of resistance, and then we still have this absolute GEX as a magnet coming down. Now, to get into a little further, there's a nice little area in the website for Quant trading app. It's called Advanced GEX. This is one of my favorite spots to hang out, because you can create your very own individualized GEX report. So if we were investing in Tesla, a few months out, we can then just select whatever expiration date we want. Say in November, we said, we can get all the ones up to November. We click submit, and we'll have our own specific tailored, or our own tailored GEX report. So if we see here, it's just those expirations that we want, and we can see that there's a little more of attraction to downside, but there's a nice soft cushion rolling up, and we'll put on the absolute GEX. And this is the values that we were just talking about earlier that we saw on the snapshot. This absolute GEX, see how it's one value? If you look on the advanced GEX, it kind of paints a different picture. So you can see where the secondary levels are and the tertiary levels, to see where there's another potential of a growing. So 200, just so you know, Tesla at 200 always has a strong liquidity level about it. If we're above 200, people want to look down to 200. If we're below 200, people look up to 200. And you can see back in videos when we were above 200 and below 200 on Tesla, and that was still evident. So don't rule this out by saying, oh, it's always there, but just take notice of it. And that's all we're really doing here. When we're talking about trading tools and using data it's they should always be saying in your mind is taking note of, right? Not really signals or signals to trade. All right, go. I don't look at anything like, okay, this is it, signal, go. I mean, really, in my head, I'll look at something like, whoa, that looks really good. Let's go. But that's just after compiling all the different types. I'll look at the RSI. I'll look at the MACD, the vortex. I will look at the sentiment being, where the call open interest is. And while we're doing that, let's see. 220, and then again, see that 200 is always big. So 220 seems to be an arguably a good destination for a target. And let's get really into it here. I went out to the November just for kicks and giggles, but let's just do the next 2 weeks. So this is this Friday and next Friday. Remember, this week is a unique week, and that's saying it kindly. We're half a day tomorrow, Wednesday, July 3rd, and we're off July 4th, and then a full day on the 5th. So this week is like cut in half, so to speak, and right in the middle of it. So when we come back on Friday, there's going to be it's going to be like a race to the finish, if there's going to be any volume whatsoever, because everyone's going to be part of their vacation already started. They're going to be gone out of the city at Tuesday, whatever city they're in. But even the non-institutional traders, they're going to be in vacation mode. So the fact that we're at this high GEX level here, and there's a drop-off, a lot of people, especially in the quant trading app community, they look for this. They look for the drop-off to kind of say, this may be an area of resistance, or this may be the last. It might be harder to go up any further. That's safely said, right? So what we're going to be looking at is the possibility of downward. How far down? Well, I guarantee you, if we start falling and we start going towards 220, these numbers will change. I always look at this too, this little outlier, this little negative GEX that slipped in above into the positive area. And now these are red. So the red means net negative. Net negative is when these bars turn red. Normally they're navy blue. So let's turn on the absolute GEX just for general. Okay, look how they're similar. This was not the first one. This one was a secondary, or this one was a little lower. So these are all changing throughout the day. I like to watch them all day long. The call volume, there was a spike right around, let's see if it's still there, 230. Okay, this is new to me. This was a little lower at 220 and 225 early. So the call volumes are picking up. Remember, this is into the next week also. And if we just get this Friday is going to be a little wonky because of the data. There's just not the full amount of days in the week. And let's see where that call volume is. 230 as well. So 230 is becoming a smart area of resistance. Not to say that it won't go above it, but it would make sense if it did not go above it. If it stopped here and started retracing down, that would make sense to me. If it went above this, I would just be like, well, that's Tesla. What are you going to do? And we move on from there. But the idea is that we look at technical analysis, right? We see that we have a line that makes sense, right? You can go way back and test it. Let's test it here. Flirted with, came about, broke it, tested it again, went down. And on the other side, came back up, tested it, failed. Now we're at it again. We're going to see how it holds up or if it doesn't. I'd be shocked if Tesla goes higher than 233. I would be shocked. Also, I've been shocked many times with Tesla. Tesla's a fun stock to trade because it's very heavily traded with institutions and independent traders alike. And we did a lot of good times with this in this trend. When you find a trend, you stick to the trend until it breaks, right? The trend is your friend until it's not. We have no reason to believe that this trend will break until it does. And it's poking through right now, but that's how you find limits for a trend. You poke through, you kind of feel around, and you come back down. It's like the analogy with the dog and the invisible fence, and they have the vibrating collar. When the dog runs to the fence, the collar vibrates, and he goes, okay, I know now that's where my limits are. So once it was broken, it was tested, and Tesla tests again. All right, I know my limits. All right, I'm going to test it again. All right, I know my limits. So now we're testing that area again. 10 trends are tested. They're not expected to hold, right? You should think of it as every time we come up to test the trend to see if it's still our friend, it's a test. We don't want to assume that it's going to be holding, because we don't get into a trade until it's proven to be held, but we can expect in our heads without trading it to be held. Does that make sense? You know what I mean? So expect with your mind, don't expect with your trades. That we'll have to work on that phrase a little bit. But 220, 233 should be the top for Tesla, and if it's not, I will be shocked, but again, I won't be surprised. We're above the VWAP. We're holding a nice, steady volume, and I actually commented on the RSI divergence is real, and it is insane. On the 15-minute, the RSI has been going straight across, and Tesla has been climbing. And on the 5-minute, it's even more annoying. On the 5-minute, it's ridiculous. We just flew up all the way up until 10:30, and the RSI just stayed flat. Like, what do you want from me? I got nothing to tell you. The MACD recharged. It went back down toward the zero barrier. The histogram turned red a little bit, but we're still in the bullish territory. So, and then, the vortex indicator, I know many people don't really know how to use this, but it's just simply that, when the positive is on top, you're in an uptrend. If the positive, the blue, is on the bottom, you should be in a downtrend. At the crosses is where the action happens. At the crosses is where you get an explosion, or if you have a rejection, a bounce. In other words, if the VI plus, the vortex, the positive side, bounced off of the yellow and came up, we should have seen a pop on the price action. So that's why I keep that one up. And this is a little more, there's a little more to it, but that was just the fundamentals of it. So now that we're talking about it out loud, right, we saw on the data where there are areas of resistance and why it should not go higher. But then when we pull up our trusty technical analysis, it seems as if, okay, we're setting up to go higher, right? The RSI is just, okay, maybe you could say that it's coming down a little bit, but that could just be like recharging. The MACD, recharging, staying bullish, but coming back down, allowing room for more to go higher, possibly. So this is why I always encourage people to talk your trades out. Really, if you're alone in the room, great. Talk to yourself. Pretend like you're talking on the phone if you need to be. But pretend like you're trying to sell someone the case on why your trade should be good. Right? So you go through all these different data points. We looked at the GEX. The next thing we're going to look at is going to be the Quant chart. The Quant chart was just raised a question today. This is proprietary quantitative method, proprietary to the QTA. Right? It was created by the one and only Brian, who is now an avid user of Quant trading app. But these values are pure mathematical figures. They have nothing to do with the options chain. The options chain, we can see that in the GEX and in the call volume, right? This is where this information comes from. We get this from the options chain, the open interest, the call volume, and so forth. With the technical analysis, we draw lines based on what we see, based on the levels that we've visited before, and we draw trends based on our experience. And this is annoying me. I deleted that. So we see based on our experience, like things that jump out at us, right? An ascending triangle, we bounce around, pattern, boom, right out of it. Perfect textbook ascending triangle execution. This is more than a textbook would be like, wouldn't use this example because it would seem too good, I bet. It's almost fictitious, the way Tesla reacts sometimes. Look at it, just lying dormant. And then we break into a pattern, break out of that pattern. And now, do we stay within that trend pattern? So anyway, sorry, I'm rambling. Technical analysis will tell us that, sure, we are running a little hot, but Tesla works on momentum, and it thrives on it. And if this RSI is comfortable staying steady after this run-up, who's to say that we can't see more out of Tesla, right? That whole 230 or that 233 that was in our heads from when I was looking at the data point, the technical analysis says, well, why are we going to respect that 233? We're doing good. We're resetting. We're gaining good levels. We're holding the VWAP. Why not go higher? For me, it's not a tradable action to assume Tesla go higher. We played Tesla up at the break of that pattern. This is enough, right? I'm good watching on the sidelines, and I do have my hedge for this Friday and next Friday to catch that possible down move. It doesn't mean that it has to happen, but I have a small hedge there because I feel like that is the more calculated or the more mathematical place of going in. Hey, what's up, Rom? Great analysis, and thanks for sharing the knowledge. I hope this session is recorded and I've got to go over it again. Absolutely. Yeah, this is re-recording. This is another reason why I wanted to do it on YouTube rather than in-house. And I'll post it for you to share. Thanks, Ram. So, for instance, what am I saying? For instance, the hedge I have on Tesla, you don't have to call it a hedge. It's just a small play. It's a small play to catch this move coming down. Because to me, this looks real pretty. This is a nice slide up. I bet you on the 4 hour, it's just one bar. No, it's not. Okay, we'll have to go to the day. Oh, it's a gap on the day. Shoot. So anyway, I really like when there's just that one green bar, and it just looks like a slide that you want to come down. And it would make a lot of sense. It would make a lot of sense if we slid back down and retested this area. I'll move it right here. What do you guys think? 210? We'll call it 210. Oh. My mouse. Oh, it's probably because I'm sharing screens and recording at the same time. Anyway, a good revisit to this level would make sense. So that's what we're playing. And I have the 207, I think, just because I was more comfortable taking a really further out of the money play. So again, I did this in a video last week. We talked about out of the money puts versus at the money puts and the difference in them. And I think that recording went somewhere. We'll have to check into that. But I go out of the money to get a more lesser of a risk. You know what I mean? There's just less theta when you go out of the money. The further you go out, the less theta has an effect on it. So if I have a 207 put, now it's calls, buddy. 207 put, the theta is a 17. If we were to get that 220 to catch the move, why does it say 220? It should say 220.25. Okay, anyway, so if the closer you get to at the money, the higher the theta is. So here we have 65, right? If we had this 225 put and Tesla went up further, you would lose more value faster than you would if you had this out of the money put. So for instance, I got this 207.5 when Tesla was at the high, I think like 222. Let me see exactly where it was. Like right around here. This is when I got the 207.5 put. It is. I'm holding it comfortably fine because it hasn't lost that much value in its trip. See what I mean? So the idea that you have to get real close to the actual price to get any gains is kind of a fallacy, because you can also lose much when you're at the money. If you're unsure of a direction, you don't have to play that trade. You know, I always say, if you don't know, don't go. But if you have, you know, these data points that are saying, you know, it really could come down, but I want to play it a little on the safer side, you just go further out of the money. You know, go further out of the money. So if we have a what are we saying here? 229 to say 210. Let's say that, call it like a 20-point move. And if theoretically, you know, hypothetically, I should say, we had a 20-point move on this 207.5, that would put us at 227.50, so maybe say 230. So if this happened in the next 10 minutes, this $28 contract would be worth at least over 4 if it just automatically flushed down there. Just to give you an idea of how that can change. And of course, the 20, if you had a 20-point move on this high theta one at the money, you'd be looking at almost 16. But this is all hypothetical. This is not actually how you want to place an option. It's just to try to show you how the in the money or at the money versus out of the money work. So it's low risk, but you get a nice reward. And then a little higher of a risk, but a really sweeter of reward. But really, if you do the math, this is a nice, it's a nice day. It's a nice day. So that's just a little bit of a breakdown. I know I kind of shared that completely wrong, but that's why I went out of the money. A lot of people ask me, why do you go so far out of the money? If you don't expect the price action to get 207.5, why get it? It's because if you're expecting a big move, big moves create bigger gains. So you don't have to get at the money. If you're passing by the price, I would, if, for instance, if I got at the money here and kept my out of the money, the price action past this, I would start taking profit on that as soon as we got out of that 5-point range. I would start taking profit. I am always a big advocate of always be taking profits. ABTP, always be taking profits off the table. You should have one hand on the poker table just cleaning chips off. You know, every so often, I'm going to take a little more off here, a little more off here. I like to be in the state of flux where I'm either adding to a position or deconstructing it. I take risk off, I put risk on. There's never like, okay, I have 10 contracts of Tesla for 215 puts, and I'm going to leave it on there until we get to 210 or 214. That's not the case. If we start that move and start hesitating right around here, consider taking profits. Always be considering taking profits. If you have that mindset, you'll be a little bit ahead of the game. You don't want to be locked into something. You don't want to feel like, oh, I can't. You know, this isn't European options. American options, we have the ability to close at any time. We're able to pass the burden on to someone else, right? So we have a contract out on something and it starts moving on direction. We don't have to wait for that strike price. We can close that out, and by closing it, we sell it to someone else. If we're on the debit side, we sell it to someone else. It's their burden. They give us the premium for it, and we walk away. We have cash in our bankroll, in our war chest, available to look around and place it somewhere else, have it working for us on something different. So keep that in mind too. When you're waiting for a trade to happen, you can wait until the trigger happens. So in other words, I got in early, right? Right now, if you're looking to get into that trade, we wait. We don't have to get into it right now. Like, or we have an idea of 210 revisiting on Tesla. We don't have to get it in now and say, okay, let's just wait, because this might trade sideways for the rest of the day. A lot of people are taking profit, but not enough people are taking it to drive the price down, right? We're kind of finding a level. And being that this week is a real unique week, it's really going to be hard to predict what happens in the next, I was going to say in the next couple days, but it's not even. You have a Friday full day, and we have a half day tomorrow. So it's really like a session and a half. At the close of this day, on a Tuesday, there's only 1.5 sessions left. So think of it like that. At the end of today, there's only 1.5 sessions left to the week. Right? Double check that. Half day Wednesday, full day Friday. So that's kind of bonkers, right? If you think about it. So these weeks, these are good weeks to maybe sit back on the sidelines and learn a new tool. Like learn, I remember when Brian first introduced me to QTA, I was not only floored and enamored by it, but I couldn't wait to dive into it. And I remember it was a 3-day weekend, and I just poured over. And a great thing about it is you can backtest to like your heart's content. You know, there's everything here is archived, and you can scroll back to one, and not just on the GEX too. Like on the website, if you're into data, there is a whole there is more data than you can shake a stick at for sure. But not to get into all that right now, but when you do get into it, take a week like this, pour over all of the data. Brian set it up so awesomely that when you get started, there's literally like a checklist to just walk yourself through. And he set it up that way on purpose. You know, you set yourself up to start at square one where it's intended. You install the QTA strips. You get used to it. You introduce yourself and how to work the dashboard, how to analyze the options risk. Wait, what is the QTA scripts? What do you mean install the scripts? What does that mean, Doc? Well, if you trade on Thinkorswim or TradingView, you can install the quant charts that we were just talking about briefly onto your own platform. I use WeBull because it's really good for teaching and education, and I'm stuck with it, right? But if you use Thinkorswim or TradingView, you can easily overlay them on there. It's simple. Just with a couple clicks, you can have it. And the weekly script comes out every Sunday at 5:30, and then the daily ones come out in the morning, 8:30. You just click on here. Great. It's copied. You open up your Thinkorswim. You put it into a script, and then you have the quant charts that you see here in the background of your charts. I like to keep them here. I'm on the website all day, every day anyway. And I like how clean it is. Obviously, you can see my charts have a little bit of a lines. This is a clean chart of Tesla, by the way. This is cleaned up for this video. So it's really, it's up to your preference. I like to use it on the website here. I'm able to look at this data cleanly and then apply it to here. So keep in mind also, you refresh it. So NVIDIA, right? We were looking at NVIDIA to go to that 125 in the last workshop, I think. Was it 125? Yeah, it was 125 or 130. So I'm going to hit refresh here and see where we are now, and we'll break down what NVIDIA is looking at. NVIDIA is hugging around the max pain line, but also these other lines here. What are all these lines? Well, this is the intraday north. This is the intraday south. These gray lines change every day, and it gives you a range for the day. And again, they're not impassable lines. It's just a box for your day to understand where a range is. If we break this range, then we look to go higher. If we get rejected as range, we look to go to lower. This line in here is a 2-day VWAP. This is like your regular VWAP, the volume weighted average, but it uses 2 sessions, today's session and the session prior. That creates a more of a smoother line. So when you interact with this line, you can kind of expect a little more respect from it. And then when you have confluence, meaning if this 2-day VWAP were to line up with the intraday, you have a more solid level to contend with. Right here, the VWAP, the daily VWAP, I don't know if you can see it, there's a little skinny line in here. That's lining up with the max pain, and we're just having price action hug around it. It's very annoying. I do not like sideways trading. I don't like it. But the community does. There's a whole channel in the community that focuses on spreads, option spreads, and they'll go over broken wing butterflies, iron condors, and there's an engine that's still in the beta stage. I'm not going to speak on it too much, but this does give alerts for iron condors in the morning or the day. You know, here's a morning iron condor. This is still in beta, but when it's finished, it's going to be amazing. People have been following it, trying to see, watch it, learn, because it's still in the learning process. It's just like a new member of QTA. It's learning as it goes. And this is all really exciting. I'm really excited about it. It's all really exciting. We're all excited. So these are just a few of the things that happen inside the QTA universe that I don't see happening anywhere else. And now I'm obsessed with it. I can't imagine trading a day without QTA because it's just another set of eyes. Like, I refer to it as like the hidden levels of the market. Bryant refers to it as X-ray specs, because these quantitative levels you don't see on your technical analysis charts, right? You have the buy level here, the green. You have the sell level here. You have the midpoint right here. The intradays. All these levels are not readily stated on any technical analysis chart, right? These don't have to be something from previous levels. They don't have to be something that we see with our eye. You know, we don't have to say, you know what, this looks like a strong bottom. Let me put a line there. This is quantitative, pure, cold, hard math that we get to overlay on our own technical chart. So we find our levels here from the tech chart and the quant chart, and then we slip over to the GEX, and that will give us sentiment. That will let us know within those levels where the options market is taking its foothold. So right here, the absolute GEX is 125. With that high GEX, that 125 is still a strong liquidity level. We have this call volume spike, which is acting as support right now, and there's a little bit of a put spike there, but the giant one is down here up to 120. So if we had to make a bracket, I would make 120 as the base, the bottom, the support, and 125 as the top. There is another one at 130 that I'll be watching. If price does gravitate up to 125, we have that chance for 130. On the technical level, NVIDIA is in a bit of a, what do you call it? Oh, I can't even think of the word. It's where you come up and you start going, oh my God, I can't think of the word right now. But it's going to come to me. So it's a word I've used a freaking 1,000 times. I can't think of it. Why can't I think of it? Anyway, so we're in this state of profit taking and getting in, getting out, getting in, getting out. And from there, we'll decide a direction. If we hold this support, which looks like it's pretty strong, NVIDIA could go higher, and which makes sense, you know. And I think I turned on the fib. Right, we did a fib. Let's do the full one. We do it from the new low, the new higher low. So this was 150 mark. I'm not going to move that one, but I did like to keep it here. Was it this one? Or that right before the big run up. I'm going to leave it here just because that feels more comfortable for me. You can choose to use whatever run up you want. And what you do for the fib, you want to go for the new higher low to the top of the run up. And then that gives you where the retracement can come. This one came right back down, touched this 50% mark, kissed it perfectly, and now we're trying to work our way back up. It could come back and touch the 50 again. We'll have a double bounce to get higher. That works too, and still staying bullish. But right now, I think we're in this like descending triangle a little bit here. You can see how this this action came up, and now we're sitting. We're hitting this resistance, this lowering resistance. So we're looking at two different supports here. I think there's a 120 support, and there's a 115. If the 120 holds, great. 120 holds, fair enough. You can still go higher. The 115 holds, still bullish and going high. If we lose this 115, then we'll start looking to lower levels. Right? We'll start looking at the 108s, the 100s. But we don't want to go there until we need to. And for right now, holding 115, holding 120 is great. Oh, what's up, Bernard? Yes. Yes, we do. And I can put an invite for you right here. I think. I'll pop it in chat right here. There is a members area and then a free public area, I should say. There's a public area and a members area. For sure. Yeah, that invite, that should work. If this is going to be on a replay, I don't think that invite will work. But if anything, just reach out to me at doc@oneononestocks.com, and we'll get you squared away. I post a lot. When you do sign up, make sure you select that you're interested in the gold membership, and this will give you access to enthusiast chat. And I do a lot of posting in there, just what we're talking about now, the quant levels, the GEX levels. I post in here on the public side. Not too much because it is a paid service, but I like to demonstrate how you could be using it in your day-to-day trading. And then when you get on the gold side, you get all this access here. If you are thinking of joining the gold, use the code DNOW30. It's DNOW number 30. So DNOW30 gives you 30% off your first month, and you'll get access to the gold side. And then on there, you can see everyone's, the whole communities on what their views are. And really a good spot where you want to start is the Quant chat. This is a fairly new for 2024 channel, which is specific to the Quant charts and the GEX charts. This would give you more of an understanding of how to use the tool specifically. And then Gold Chat is just your general stock chat channel where people share their own platforms, their own spreadsheets, and their own views on it. Hey, TRS. Great info, mate. Do the intraday levels on the Quant app show previous day's levels? Great question. Why is that a great question? Because we can demonstrate how to do it. So here's the Quant chart. Nope, that was the... So, okay, get the Quant chart. You go here. You go to Quant levels. Biggity-bam. And as that's loading there, I'll go to this Quant chart. So if we want to look at the intraday for yesterday, this is today. This is the 2nd, right? We want to see where this was yesterday. All we need to do is click backwards, and it takes us one day into the past. And if we want to go to a specific day, you click on the date, and there's a calendar here. And we can go, I mean, I think this goes back at least 4 years. Don't quote me on that, but it goes back far enough. Put it that way. So if you want to get the beginning of the week, and let's say this was Friday, you want to get the beginning of the week, we were on the 28th, we would just go to the 25th. We'll click that. I think that's the Tuesday, actually. But we could see where it started out. And this is great. This is phenomenal if you're just joining QTA and you want to get to know me. You want to get to know how to use the levels, backtest it. So we say, okay, if we got to the 2 sigma on the support side, we should then expect NVIDIA to start heading towards the opposite side or away from it, right? Because 2 sigma is the outlier, right? So if 92% of the action happens between the 2 sigma lines, anything outside of it is rare. So for instance, here we went above the 2 sigma and then we came back down 2 sigma to 2 sigma. That's the trajectory that you kind of look for. It doesn't always happen perfectly like that, but that's what we look for. So then we're on the 625. Let's get back to reality. So if we're on today and we want to see yesterday's, we just go 1 day into the past and we can see where the intraday levels were. And they were adjusted up to from 122 to 125. And I remember this day was great because we came down and we touched the buy zone. And I think we made a private video of it, but either way, we posted in chat, you know, NVIDIA touching buy zone, now looking for support above the 2-day VWAP. And then we can fast forward to the future. And it looked like it failed that support. And now to see if we came down and find support anywhere else. So right around the max pain, it kind of found, it looked like technical support right here. But now it's running into resistance on that intraday level. And when we break this intraday level, there's the midpoint right above it. But when we break levels, a really good technique or strategy is the simplest one there is. It's break and retest, right? Any hard level you see, if you see that we break it, you come back, you retest it to go higher. A break, retest higher, good to go. If you break it and on the retest it fails, well then you could just come back down to the next support. But that hold on that retest, that's gold. That's really gold. I mean that fills me with chills just thinking of that confidence that comes when you retest the level and it holds. It's great, especially when you find sentiment higher. Like we find sentiment in the GEX levels higher than that 122 level. I was on NVIDIA, right? 125 was a high level of interest. And then the secondary one, I like that secondary is 130. So we have all these green bars here. It's not just one lone one. It's a lot of pull. It's logmatic. You know, some people that trade using these GEX levels, they look at these charts purely for volatility. They look at it just for a lot of volatility. All right, we see volatility is low because these are navy blue and they're not red. And that's the information they glean from it. However you like to trade is how you like to trade. I like to use it specifically for strikes, and I like to use the call volume for resistance and support. But however you get accustomed or more comfortable using it, that's the way you should use it. And then share it and share in the community. Share in here like, oh, I'm using I'm looking at this. How do you guys think? And just get someone's opinion. It's always good. But that was a great question. Going back and back testing is the best thing you can do when you're first joining. And if you're just coming in, DNOW 30 gives you 30% off your first month. And then once you join, reach out to me in the chat and we can get started. And I'll get you set up. There's someone send me a message. I want to take this aside and see. Just want to see if someone missed it. I had to drop off. Can't get it in. Get in the channel. I better be watching the recording. Thank you for running it. Hey, no problem, Emerald. If you're seeing this later, you got it, man. And we'll get back to this. And slide this back. I try to operate on one screen when I'm sharing, so that's why I have everything's not full screen. I like to click here. I can see my WeBull. I can click here, and I can see the Quant chart, and then I can click here and see the Discord. So the Discord has its own tools. The tools that are on the Discord, you could pretty much, if you install the scripts on your platform, these levels will be on your platform, and then you could just trade out of the Discord. You can have the gamma exposure channels open and just cycle through them, getting a snapshot every 15 or 16 minutes. I like to have the advanced GEX open because there's more information there. the information that is in advanced gex, you can get a little more detailed with it, and I'll show you exactly what I mean. So if we're on SPY, let's stick with Tesla, right? Tesla, and they make cupcakes, right? They're a cupcake factory. We can uncheck everything, and we're just going to stick to this Friday, even though it's the unique week. So, for instance, this is what it would look like on the snapshot shared in the GEX feed, right? You'll have the call volume, the put volume, the GEX levels. You'll see the absolute level and your spot price. We come here, we can add different data. We can toggle everything. I don't want to look at the call open interest. Call open interest pops up. Wow, look at that. 205 is a spike for call interest. Tesla never fails to be weird. The put open interest is just below it at 200. So here we have a bit of a discrepancy. The call open interest and the put open interest are both 20 points lower than where the price is right now. The high GEX reigns supreme with its liquidity right here. The absolute level, the marker is at 220, but when we put on the absolute GEX, we should see other spikes, and we'll get to see where the secondary and the tertiary levels are for absolute, and we'll monitor them. So the absolute, oh, here you go. The first highest level is right here, but look at it, close second, a very close second is 230. This is a high liquid area. This would be a hard area to get out of. Even that call open interest and the put open interest down here, this would be a good bookends right here. So anyone that's into iron condors or, broken wing butterflies or any type of non-directional trading, this is the type of data that you look for. You want to look for bookends. Okay, to be a little hard to make a case that the price action would travel down this way. And it would be a little hard to make a case that the price action would just travel this way. Unless sentiment changes here, this is where we're going to hang out, which falls in line with what we said in the beginning of this session, was that don't be shocked if Tesla just trades sideways here, right? We have a nice support of the VWAP, but we haven't even really tested it yet. We have a nice support of that symmetrical triangle that we just broke, barely over it. And on the high side, we have that 233 technical area that we went back and we saw from here. And then on the quant chart, I think we're in 2 sigma. I think we're out of bounds, right? When I say out of bounds, I'm just saying in the percent of outside of the 92% area, outside of the 2 sigma line. So here's the 2 sigma zones, right? I think this was, what does it say, the 25th? So this was last week, right? Down at the 2 sigma support, and now 2 sigma resistance, broke through it. Tomorrow, these intraday levels will be different based on today's data. These 2 sigma levels are static for the week, so we will still be outside of the 2 sigma range for the rest of this week. And again, this week is weird. There's only 1.5 sessions left after today. Even though today is Tuesday, there's 1.5 days left in this week. So again, this is a great week if you're thinking of trying new tools. This would be the week to do it. You can work on the sidelines. You can watch the price action get really crazy between all these days off and this time off. But you can also backtest and find out what's going on. I find that QTA, and I've said this before, and I want to change up the phrase, but it's been holding true so far. QTA makes good traders great and makes great traders more confident. It makes all traders more confident, but you have to use the tools. Like, you have to open yourself up to the data. And what I mean by that is, if you learn how to use the quant charts, and you're like, okay, I know that I trade level by level, right? Doc always says, if we reach a level, we break, retest it, we should go to the higher level. If we get rejected at a level, we should visit the level below it. So if we got rejected at this sell zone, we should expect to revisit the midpoint or even the buy zone. If we broke the sell zone, we break it, retested again, and then retested again, the 2-day VWAP. On that last retest, that's when we flew up. If we can go back yesterday, let's do this since we're talking about going back yesterday. How would we have played this yesterday, Tesla? Because there are people in the community that did, and they posted about it. I think Brian had like 265 calls running a few months out that he's been closing on because of this pop. So where did we end yesterday, right? We broke the sell zone, tested it, proving that we held volume, and we bounced off the VWAP in the very last minutes of the trading session. That, to me, is a bullish statement for the future. If you can close and stay above the VWAP on the entire day, the next day, you know you're going to open up above the 2-day VWAP. So this 2-day VWAP will then be here on the following session. Does that make sense? So remember this line. That's going to be the 2-day VWAP when we go into the future, which is right now. See how that, now the 2-day VWAP is there. A bounce off the 2-day VWAP. Like I said, it's a little more respected than the regular VWAP. It just uses more data, right? So it's a little smoother. It's just like moving averages. You know, the 200-day moving average is a lot smoother than the 5 session, right? So if you were to play the 2-day VWAP by itself, you could play the bullish way this way. The intradays, I was playing the intraday this morning, and I was like, okay, you know what? We have to come back down. I was convinced that this gap was going to be filled. We're going to run into the intraday, and I jumped the gun. It was a small trade because I know this week is really whack. So I was like, okay, 2075 out of the money, no big deal. Popped right above it. Tesla never ceases to surprise me, and that's why I love trading it. That's why I hate trading it at the same time, but this is the way it is. If we were to start coming back down, there would be the VWAP, right? It'd have to be broken. That would be first to go. Then the intraday, 221. The 2 sigma, to me, doesn't act like a support or resistance barrier. To me, this is just a math level to let us know that, hey, there's a lot of stuff that goes on within the 2 sigma zone, and it's very rare to operate outside of it. The next week, we'll have new 2 sigma lines. So the new 2 sigmas might be a little higher. So we'll then be operating within that construct. So everything changes coming next Monday. But if we were to start traveling down to that 210 that we were talking about, the technical level, there's a few areas in between that are going to cause contention, right? And I really don't see it happening this week. I always try to preface it by saying, like, I wouldn't be surprised, or I'm not going to be shocked if, but you just want to leave it open for whatever can happen. That's why I went 2 Fridays out and a small trade to see if we can catch this fall back down from the high grace. But it is, you know, it is a powerful move that Tesla has done the last week and into today. And momentum is the fuel for Tesla. And FOMO is a real living thing when it comes to Tesla. When people see Tesla move, you're like, oh, I want to get in on that. And when they see it catching a level, it spikes the interest a lot more. So if we trade sideways here and open up tomorrow, we could see another bullish day. Everything is kind of resetting. The MACD is resetting. The RSI is slowly, painfully cooling off. Look how slow this came down. Just going to ease, coming on down. Meanwhile, the price action went up and holding. Bullish divergence, right? Amazing. I think that's all I have to say about that. I can talk about Tesla till I'm blue in the face, and it really is coming to ahead of where Tesla's going to go. For so long, we were just able to talk about Tesla in this downtrend. All right, we're at the bottom of the trend. We're going to play it to the up. All right, we're at the top of the trend. We're going to play it to the downside. Back and forth, back and forth, back and forth. Now, when we're hugging this downtrend, it kind of threw at least me for a loop because I was waiting for it to just come back up, come back up, come back up. This was annoying. Oh, my God. This was ultimately, for me, it was annoying, but it was beautiful for everyone else trading iron condors and iron butterflies till you could do that till the cows come home, and you would have been doing great. But for me, this is a waiting game to see if Tesla pops. We might, the next level up is what, 264 we said? And if we get rejected, we could visit 210 easily. That makes a lot of sense. Visit 210 or even, let's mark it down here, 207. Is that why I did the 207.5? I must have been looking at a different chart. That makes a lot more sense, the 210, right? I think we moved the 210. That's right. Yeah, I moved it here. My fault. So I moved it here as a level to revisit, which that could make sense, but this supersedes that. This is a nice slide. Oh, you have no idea how much I want this to be covered. And that's the only reason why I have that 207.5 out there. It's just because of my own hang-ups. And a nice stretch. Never forget to stretch and make sure you guys are getting up and walking around a little bit during your day. You don't want to... We work at a desk. We don't want to be sitting in it all day. So what's really exciting is that this is what we're used to. Technical analysis, right? We can look at price action. We can add 17 different indicators. I have these 3 up just because this is the 3 that I teach, and I want to get everyone accustomed to it. You can cycle through any other indicators you want. But we're limited to what we can process in our brains. The trend lines that we draw can be different. You know, I was at a seminar once where we had 20 people, and we handed out 20 sheets of paper, and we said, you know, draw trend lines on what you see, and and then discuss it. We had 23 different outcomes because some people took the liberty and they did an extra possible outcome. So the idea that trend lines are drawn is like solidified in stone is a fallacy. It's an art and a science. We can look at this one way, and then tomorrow I can look at this completely different. You can see something different than me, and they both be true. It's just, it's all perception. When it comes to quant charts, it's not. It's math. I like it. It's rigid. It's cold. It's hard. It's calculated. It's something I don't know anything about. All right? I'm more of an artsy-brained person, so I have a bunch of lines everywhere. And I also have a little bit of a OCD, so I have to fix this right there. So what the beautiful part about QTA is that it can allow you to do what you're normally custom doing, which is drawing trend lines, drawing levels on your technical analysis charts, but then at the same time, overlay another filter to your vision of the math. And then when you have confluent levels, so let's say that 207 we said, let's get an example of confluent level. 207 would be a nice line to come back down to. I want to make it so it says, yeah, 207. That makes sense. Technical level, come back down to 207. On the quant chart, what's at 207? That is the sell zone. Usually this is considered just resistance, but since we're on the top of it, this is now support. A revisit to this 207 is now a confluent area. Granted, getting through all these. So we have a level on a technical chart, 207, and we have a level on the quant chart, 207. What's left? We look at GEX, right? We have our advanced GEX open, and this is for this Friday. 207 would be right here. This is an outlier. This is a negative GEX in the middle of positive GEX. You can also consider this positive GEX is in the middle of negative GEX. So this area is of interest to me. This is weird anomalies, I guess you'd say. Well, it happens more often than not to be called an anomaly, but it's something weird. So this takes notice for me. If we go into next week, I'll just use just next week's, and we'll see. Because this week is, like I said 15 times, it's a unique week. So we're going to play for next week. See if that lines up. There's still a little bit of weirdness right around 207. And let's see where the absolute gex is. It's highest at 230, second highest is 220, and 210 is 30. Call open interest. Oh, that's right. There was something weird going on with the call open interest, and the put open interest was down there too. So this is, you could just cycle through this and find where things would make sense. Oh, for next week, a lot of people are looking higher. If we break this 230, create support, this is open. And what I say, 264, that was the technical level high for Tesla. So, again, Tesla surprises me but never shocks me. If we break this 230 and we end up holding it, we can see 250. And I would come back and check these levels, these sentiment levels, to see if any of these GEX levels change. And they should. They fluctuate throughout the day. And where's the absolute? Pretty low, but not dormant, right? So this is what spurs my thinking when moving forward, right? We just closed a bunch of Tesla trades, and now we're thinking, the first human instinct is to think, all right, we just had a monster trade, a monster move. Where to next? Where can I align my guns? Where can I focus my energy onto it? We don't necessarily have to. We can sit back and wait for that perfect storm of data to make something with. And that's what we're going to do right now. We're in the waiting game. You know, we're going to have to test this VWAP before the end of the day. I think it's a moral imperative. And on that test, we'll know a lot more information. If we get a nice bounce, okay, that's good. That's bullish. If we start seeing a break and then a retest of the underside, that could be bearish. But it's called day trading. It's not called everyday trading, right? We don't have to trade every day. We can wait for a specific environment that we like and what we're used to. We're starting to see curl down here on the RSI. That's something. I was watching this all day. New lows on the RSI, and still price action is making non-directional moves. Crazy, man. Crazy. Any questions, really, feel free to type them out on the side right there. This is something we normally do in-house. By in-house, I mean we have a voice channels. We have a public and a gold. And Bryant pops in there if he wants to address something. And I pop in there what's really like once a week, but we could do, might be looking up to 2 times a week, not sure. But it's there. We do a workshop. I make sure I do a workshop every week. So if there's any type of questions or, you know, little things that you asked in the room, you know, or maybe you haven't even get a chance to ask, you don't want to ask in the room, whatever it is, come to the workshop. You can DM me, right? You just go here, and on the bottom of here have a message. Send me a message. Say, can we cover this in the next workshop? Or can you help me one-on-one? We set something up. Whatever the case, whatever you want to do, that's the beauty of having the community behind the tools, is that you'll learn how to use them, how other people use them, but you also get comfortable using them to your best advantage. So if you're a swing trader, you know, you might get really used to using the advanced GEX because you can highlight what expirations you want. If you're a day trader, you might just put on the Friday expiration. If you're a day trader, you'll want, and then you trade the SPY, you'll want to take notice that there are the 0 DTE expirations on the SPY. So when I'm day trading the SPY, I like to uncheck them all, and I'll do the one that's expiring today and the one that's expiring the next day. And then I'll get a nice rounded out view of what's happening, and I won't use today's expirations, I'll use tomorrow's, or I'll do a combination of them, right? I'll do, if we're doing a calendar, like if today was, Powell was speaking in the morning, but if Powell talks after the interest meeting, the Fed meeting, you could play a calendar. You could play, well, if we're going to fall, we're going to be falling today, and if we're going to be rising, it'd be over a couple sessions. So you could play the short today, and then tomorrow play for this move. Not that we're gonna have a short today, but let's see. Let's look at the SPY, just what we were talking about, and see what we can develop here. So the SPY was all-time highs, and now we're bouncing between support and all-time highs. So there is nothing stopping us, right? So let's, okay, stop, break it down. Break it down. We are looking at a box of 542, and the top is 550. Fair enough? Within that box, you can have price action touching both ends. So we touched the bottom one pre-market this morning. Why not touch the 550? Let's go with this theory that we're going to touch the 550. See how weird this is, that tomorrow's a half day, and then this is the off day, and then that's Friday. So is 550 in the cards? We'll look at the advanced GEX. 548 seems pretty high. 549, 550, a little low, but look at the absolute GEX. We're in this nice little blob. We're in this comfort zone here. Moving higher out of that, it's possible, but it's not prevalent. It's not paved to say, oh yeah, for sure 550 is definitely a target. Technically, sure it is. How about if we get, what is the next? The 8th, 9th, and 10th? Let's go next Tuesday. Just a random day in the future. And we'll see where the sentiment is for Tuesday. This is next week. 550. There you go. Everyone is seeing what we just talked about. What we just said, hey, you know what? Why not price action going to 550? Maybe not today. Maybe not during this half day. Definitely not during the day off. Maybe Friday. Whatever the case is, people are going out a few days and getting that 550. On the other hand, there's a lot of people thinking, revisiting to the support and actually breaking it. And I think I saw 530 something there. That would line up with this one, or even here. 534, 537, 542. And then we overlay the absolute GEX. Absolute GEX is just below where we are right now, but there's a nice spike right there at 550. Finally, we'll get the call open interest. Boom, 550. Right, and just to say it, right here. So 550 does look like a pretty smart move. We have the call volume at 545, which could be acting as support now, along with the absolute GEX. So we don't want to rule that out. I'll revisit to 545. Which is also the VWAP. So the VWAP, absolute GEX, and the call volume all is at a confluent level. Now, if we want to trade, no, not trade, if we want to pull up the Quant chart of SPY, these are values for this week. We were looking at Tuesday next week. We don't have those values yet. But just for right now, where are we? We can go all the way up, 549.90. That works, 550. So 550 is open, right? We just went through all 3 different data points. Technical analysis, yeah, 550 seems all right. I know I moved the line there by accident. Put it back up. Sure, open, right? No resistance here. All red. You could slide right up to that. That's a go. Quant chart, that's a go, right? Nothing in between there. Support, support, support. All below us. Open air up to 550. And then finally, with the GEX, it was a little finagling that we did. We went out to next Tuesday. I'm not sure how comfortable I feel about that. Let's try this Friday. Let's stick with what we see. Boom. Friday, 550. Absolute GEX. Highest liquidity. 550, 550. Everything is screaming 550. How about one more? Call volume, 550. And now call open interest. Oh, 553, but also 550, right? So you see what I'm saying? Attractant, 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 and absolute gex, attractant. 550 seems like a good trade based on this data alone. And then you just go to your options table and you say, okay, what do we have at 550? I would not go to 550. I'd probably get 549. We don't want the second. We want the fifth. It is amazing that we are talking about 550 for the SPY when not too long ago we were half this. But that's what it is. The stock market just goes up. So 549, this would be a good option for me to think about. The implied volatility is super low. Wow, that's amazing. I'm just not used to seeing that on the equities. But that would be a smart play based on those data points. I got a little below the 550 because I want the price action to pass it. So if the 550 is target, we get to 549, we catch the theta moving in and a little bit of the theta as it passes us, right? And we don't have to hold the whole way. Is there anywhere before that? We could see 548 being a little bit, but there's only 4 points in between, so you want to find places for profit taking. So we're a little cranked right here, just breaching the 70 mark. This could be a little bit of a resistance. I think I moved the line. I'll borrow that back. Right? That line makes sense. Touch, touch, break, touch, break, and then retesting of the bottom. You can look at it that. So we're retesting this level. This would be the actionable level, 547. A break, a retest of 547, that would be a go for 550. If this holds as resistance, we go down here. Does that make sense? Break, retest, higher. Or a rejection. Those are the two options that we could see happening at this level. Granted, at this rejection, VWAP can hold it as support, and we can take again. Holding at this VWAP would also give a chance for the RSI to cool down. So rejection here, but staying above the VWAP at 545.54. So it's at 545.50. Holding 545.50 would be good for higher. But I don't see just traveling right through this. There has to be some type of consolidation. Oh my God, that was the word I couldn't think of before. I must have said this word 100,000 times. I'm saying the word consolidation I've said over 100,000 times, and I couldn't think of it this morning. But alas, we have it. We've said it. So that's really the breakdown of it. This is a possible play for the week. I don't think I'm going to act on it because this week is so weird. Sometimes I would look at it and be like, oh, what's 88? What was it? Oh, now it's 90. What is $92? But you have to take every trade as if every dollar in that trade is your first dollar in the market. It's yours. And I cringe when people say it's house money. Oh, it's house money. No, it's not. It's your money. You did the research, you did the planning, you constructed the trade, you executed it. You collected the gains. That's your money. It's not house money anymore. So every dollar in your account, you have to pretend or act as if it's your first dollar and your last dollar in the account. So, it's only $90. No, You should not look at it like, oh, chump change or whatever. Take it seriously. Take every dollar seriously. So we're going to watch for that VWAP hold for a chance higher. That VWAP breaks, so we go falling down to 542. But that's the long and the short of it right there. Keep in mind, if you do want to join the Quant trading app, I put a invite in the chat. If this is a replay, it might expire. So if you wanted to reach out to me, you can reach me at doc@oneononestocks.com. If you wanted to get a one-on-one session or learn about options, whatever the case is, we can set something up with that. Or if you want to get an invite to the Quant trading app, there's a public area. And that's that. Don't forget, please hit like, subscribe, and hit the bell. We don't do this all the time, but when we do, you want to get notified. And any questions, feel free. You can email me there, or again, you can find me in chat. You just click here, and a little on the bottom, it would say message me, and that's where you message me. And Bryant does not DM for security reasons. There's just way too many imposters. There's imposters for me, but just be cautious, right? Just know that you're DMing me, and that's okay. But the community is really there to help out. You know, you could post anything. Everyone would be more than glad to help you. And if you're just joining on the gold side, start at the welcome. That's under the dashboard, the getting started welcome zone. And hang around Quant Chat and spend this unique week learning a new tool. And if you have any questions, reach out. And I'd be more than excited to help you. And as I'm saying that, Tesla is testing the VWAP. I want to hang out a little bit and see what happens with Tesla here. But I'm going to make a note to cut the video if I decide to mark it here. Let me see. 134. This was what we're waiting for. If I did not get in this position early, this would be what I was waiting for. I would be waiting for a break of this VWAP. I would get in, say, 10 or 20% on the break. I would wait for a retest of that VWAP and then play to the downside. If this VWAP holds, there's no trade to the downside. You would not enter that trade if the VWAP holds. The VWAP right now is at 58, 226.58, and we're at 227. So we got a little more to go. Did we break it? No. We were 10 cents above breaking it. But now it looks like... Excuse me. This is a crucial level. This is going to be the first time we tested the VWAP since this morning. This could also be lined up with the confluent level of the... This is the symmetrical triangle right here. So if this breaks, you have this as support. And that would be huge, by the way. Let's just take a second to realize that. Or, wait. Or is my symmetrical triangle unbelievably, scarily on point? I mean, I don't want to pat myself in the back, but okay, I will. Look at that. You see that? That the wick is outside of the symmetrical triangle, and the body is below it. Let's see if that happened last time. Sort of, right? We're on the daily. So this has been respected. 1, 2, arguably 3, 4. This is the 5th time we're testing it. Why wouldn't it hold? Right? I mean, we bounced around. There's that 5-point A, B, C, D, E. Usually the F is for flush or fail, whichever way you want to look at it. But this is beginning to look really good. How that held right there, I like that. The VWAP, it's looking kind of weak. Looking kind of weak. I'm looking at my other chart here, and I have, what are the EMAs? Let's pull them up. On the 15-minute. Yeah. So on the 15-minute, the EMAs, we have, what is this? Is this the 21? Yeah. So this is the 21. If you guys don't know about the EMAs, the 9, you're fine. The 21, you're done. So meaning you hold the 9 line, which is also known as the trade line. Once you lose that, you have the 21 as support. You lose the 21, you're done. Meaning the run is done. I think that's part of the actual phrase. Hold the 9, you're fine. Lose the 21, you're done. The run is done. Something like that. It's a cool nursery rhyme that all the kids learn, right? But we have a lot of intersecting lines right here. We have the VWAP, we have the 9 line, we have the symmetrical triangle, we have the 21. The symmetrical triangle should not be, this blue line should not be looked at as a support right now, because this is so wacky. You know, it's different on the, when you use different charts, it's going to be at a different line. It's just an area. So if we look back a week from now, we could say, oh yeah, that was rejected at that symmetrical triangle. Oh, for sure, that used it as support. But when you're in and out specifics on a day trading like this, I don't like to use that large pattern as a support and resistance. And what I do, I just cycle through the time charts here. I'm looking at the VI. If we have the gold cross over the positive, which is the blue, we could see a nice move down. If the blue bounces off of the yellow and we have the blue literally just bounce off, you could see a nice flush up. So the fact that these are about to intersect right at our decision or actionable line says a lot. It says volumes on what we're looking at. It's telling us that that makes sense, that this is an important level because these are matching up. You can look at the MACD. The lines are crossing. This looks to be a little bit of a down move. The RSI is finally starting to collapse from its own weight of being just like, it looks like a roof with no stilts on the other end. What you want to see on the RSI is like movement. You know, it backs itself up. It supports itself. If it doesn't support itself, it falls. And as it climbs, it checks the levels. Climbs, checks the level, climbs, checks the level, climbs, checks the level, fails, fails. Yeah, I'll get that out by the end of the day. For what? Wait. Was it for Vermont? Okay. We don't do business in Vermont. Just let him know. This is like, he's been grandfathered in. We don't try to take any new clients from Vermont. Thank you. Sorry, that was the insurance side of things. But as we're watching Tesla's price action navigate these levels, I'm wondering what the sentiment is looking like on our GEX. And what I mean is, as the price action starts moving away from a non-directional, static position, people start placing their trades, placing their money into certain areas. So we have that 220 as the main bar, but we have selected everything. We want just the 5. We'll start at the 5, then we'll add the next one. And I like using the advanced GEX because you get live up to the second information. The snapshots are great. And they're really great because you can look at them as like a tail of the tape. You can look back and where we were an hour or two ago and see if we're increasing in certain areas. $220 is the high level. There's a put spike right there. And does it make a case to go down to 210? Not really, huh? But as this travels down, we're going to come back and check, right? And this is where we get to the advanced GEX. That looks similar, right? From what I just had up. This is that. This is a little more updated, but then we can toggle in other data. So that 205, that's the call options, right? That's so weird. The call open interest is 205, which is 20 points lower than where the price action is right now. And this is what I alerted that a big drop could be in the cards for Tesla, right? And I think I said that early this morning. And that was before it kept going up. So people read that and were like, oh yeah, good stuff. It's just climbing up higher. I was responding to someone. NVDA. Oh, I think I posted it in Quant. Let's just see what I wrote. So this is a typical post in Quant data. You'll have a GEX chart where I posted this, being that we had this huge call volume spike at 220, which we broke, and now is going to act like resistance, and we went all the way up to 230. So this was the original, what we looked at. So you see here, it was 225 and 230, these small spikes. Now look at the sentiment. 225 and 230, they're all big and they're all matching. As the price action moved higher, the 225 and 230 changed. So that's why it's important to get fresh data when you're trying to enter or exit a trade. You want to get the most up-to-date information because they're constantly changing. Call open interest, the put call volume and put volume changes throughout the day. So now the call volume spikes all the way up to 230. We are below that. That's a resistance now. There is no support that we are going to be looking at on call volume. When it comes to call volume spikes on Tesla, there's no support with it. Next thing we're going to look at is the put volume, because we're looking at puts. Put open interest 200, call open interest 205. That is just bananas to me. So 205 is really standing out to me. This whole area, 207, 205 to 200. This lower end is attracting. The absolute GEX, we'll have to see. It's really high where we are now. If this starts to change, we'll watch this 205. If this 205 starts climbing, it's going to be more of an attractant. So we'll see how this plays out in this unique week. But I want to thank you guys for watching. If you made it this far, you're definitely interested in GEX and the Quant charts. These are tools that we use for QTA. And we use them every day, and we trade more confidently with them. I know I do. And I know the people that I've instructed and showed how to do it, they're confident traders as well. You can also. So if you're on the fence about doing it, come to quanttradingapp.com, use the code DNOW30, and you'll be all set. If you're already in the Discord, just go to server guide, click on the website right here, and it'll take you to the checkout page, and you can upgrade to gold. If you're in the public area, find me in public chat or enthusiast chat, and we'll have some conversations. Yeah. Well, that's the long and short of it. I do hope you guys have a safe and happy July 4th, and we'll do this again. This has been a lot of fun, and I look forward to it. Don't forget to hit like, subscribe, and hit the bell so you get notified when we do this again, and I will see you guys soon. Take care.